development. But for now, let's take a look at the logistics space. Jeffrey's note says that the sector in India has grown at a compounded growth rate of 10% between FY18 and FY20, and that organized companies could grow as much as 20% in the next 5 years. To discuss the outlook and demand picture, we are joined by Rampraveen Swaminathan, who's the MD and CEO at Mahindra Logistics, and Anil Gambhir, the Chief Financial Officer at Blue Dart. To both of you, thanks for joining us on the show. Mr. Swaminathan, I want to start with you because, you know, there is a big growth potential in this sector, especially with e-commerce coming through in a big way post the pandemic. Can you tell us what is the sustainable growth for a company like yours, and what are the, the opportunities for the sector as a whole?
Good morning. I think if you look at our own business over the last 7 or 8 quarters, I think excluding the automotive business, all the other businesses have been growing at high teens or mid-20s in all our end markets. Obviously, I think e-commerce is a strong growth driver as well. Now, this peak, the festive season that just went by was a bit softer than we expected. But from a broader perspective, we expect that growth to continue as there is more demand which moves online and increased network densification across the country. So I do expect a bounce back in the coming quarters to much stronger growth levels.
Mr. Gambhir, is e-commerce a very large, is it a primary driver for you?
So good morning to you all. Definitely e-commerce is one of the very important sector for us, where e-commerce players, because that holds a good promise in terms of high growth, because as we know that in retail, e-commerce, contribution is still at a very low levels. It is somewhere around 2.5–3%. So if we benchmark it against developed countries, you will see that 15% of retail spend or of the retail spend is contributed by retail. So here we have a lot of headroom. I think going forward we see good opportunity there.
Okay. Mr. Swaminathan, good morning. For a lot of these companies, I'm assuming that fuel cost would be really hitting hard now. As a company, how are you negotiating that? Is it a straight pass-through? If you could give us the dynamics.
Yeah, sure. I think from a sectoral perspective, I guess, for us, definitely it's largely a straight pass-through to our customers. Fuel prices are indexed in almost all our contracts, and they do go through. That said, I think there is a broader onus from a customer relationship perspective and a sustainability perspective to drive fuel efficiency improvements. And so we continue to work with our fleet operators, transporters, especially on the surface side, to drive more fuel efficiency in their fleets and operations. And we generally transfer those benefits to our clients.
Okay, and Mr. Gambhir, is the same true for you? And considering that you have a lot of riders who would be impacted by this high prices.
So just to brief you, we have been having this fuel surcharge mechanism for almost 20 years now, which has seen all volatility of highs and lows of fuel. So we have this natural hedge available whereby all increases or reductions is passed on to the customers. So that way we have been protecting ourselves. Having said that, I think recent fuel volatility has been quite high and may lead to high inflation, which could have some impact on the economy, but otherwise we are protected from the fuel volatility side.
The market is growing. You described, Mr. Gambhir, e-commerce doing very, very well and large potential to grow. 2–3% of retail sales benchmark globally is about 15%, so that's a big headroom. But what about competitive intensity, Mr. Gambhir? Is big ramp up by new entrants a concern? Because we are seeing that, aren't we?
So competition is most welcome, and competition only helps us to be on toes to deliver superior service quality. So while having said that, we have had superior technological, solutions which improves the customer experience, and we've been keeping ahead on that front. So while competition would be there, whatever you may wish, but you can't do away with competition. But the only differentiator will be that how you are meeting customer demand and what kind of experience you are living with them. So if you have a good customer experience backed up by technology and also passionate Blue Darters, I'm sure we will be able to sustain that competition.
Right. No,
And other side of it is most of the competition has been, backed up by PE funding.
Yes.
So if you look at it from model sustainability model point of view, I think that sustainability has to come in so that they become self-sustained.
Got it. No, all points taken, and no doubt what you're saying is extremely relevant. But does it cap pricing for you? Because as you said, I mean, most of this new competition is PE backed, right? Not answerable yet to public markets, investors, etc. What does that do if, are there big discounts being offered to try and take away business? What is it doing to pricing for you?
So Blue Dart believes in doing business profitably, and we have been doing that so far. And we believe we will continue to have our pricing that way. Having said that, I think our focus, as I mentioned earlier, has been more on customer experience. So whereby if you are able to engage customers positively and influence them, I think that's where one would be able to win our competition. And we have been so far have been successful, and we believe going forward also our technological edge will make sure that we continue to be up against the competition.
Actually, there's a lot of competition, right? And there's a lot of disruption in this space as well, with big moves in digital too. Mr. Swaminathan, what is the market share that you enjoy currently? Has it gone up or down in the last 6 months? And how are you battling the competition?
Yes, I think the market's very large, and I think none of us are really, I think industry structure is pretty fragmented right across the board. And for us, I think in our addressable market, we're around 3.5% of market share. And in most parts of the market, I think excluding the automotive space, we continue to see really good traction. I think from an industry competition perspective, first thing I would say is that this is a very unregulated and informal industry. So increased formal participation is actually very good for the industry. From a long-term perspective, I think it actually improves value chain performance across the sector, right? And that's good for us. From a short-term perspective, I think for us, the play has been 2-3 things. The first one, as Mr. Gambhir said, your focus on customer value creation, drive more technology-level integration of services. And competition is not across the board. So at Mahindra Logistics as a diversified player, we are diversified across end markets and across 11 to 12 different services. So for us, that diversification of customer and market and service line actually is a big lever for us as we create customer value and kind of engage with others in the industry.
Okay. And what is exactly the share of e-commerce in your overall revenue pie, and how much do you think that can grow?
Yeah, so right now the e-commerce is in the mid-teens. It's around mid-teens from an overall revenue perspective across our supply chain and mobility businesses. And as I said, we've been growing at the mid-20s the last 3-4 years, and we expect to sustain that. Earlier this quarter, we actually announced an acquisition of a company to strengthen our last mile delivery business. So both in terms of footprint, service line, and technology-led integration, we think we'll continue to grow our engagement with a large customers in the e-commerce space.
Sure. Just one last question for you, Mr. Gambhir. This is the year of reckoning for the dedicated freight corridor, because we understand that I think 1,100 kilometers of the 1,500 kilometer stretch has been commissioned of the DFC. This will perhaps increase the need for last mile connectivity as well. Is this also a big opportunity for players like you?
So we are looking at all opportunities, including all development in the infrastructure side, be it dedicated rail corridor or even freight corridor. So all of them would offer efficiency to logistic companies, whereby we'll be able to improve our deliverables to customers and also improve our service delivery. So I guess this will be a good opportunity as we move ahead in the future.
All right, gentlemen, thanks a lot for joining us. So that's the logistics play. That space has done well. Well, the market's cooling off a bit, especially the bank nifty, a bit nervous ahead of that monetary policy. Let's get Mitesh's calls before we toss it to the monetary policy coverage. So Mitesh, been a very interesting first hour. Mid caps are racing away, large caps consolidating. Your thoughts on index and your stock calls?
That's right, Anuj. I think that's been the theme for the last couple of days. And in fact, early in the morning, I was not very keen to buy the index with a gap up opening because I was not really sure this gap up will sustain, especially we also have an event at 10:15. So the idea is that avoid the index for the time being, trade with stock specific biases. And I have two names. Deepak Nitrite is something which I think, is getting into a strong up move. That could possibly see continuation, and that's a buy with a stop at about levels of 2340. For targets of 2460, while Britannia is something, and the FMCG pack has done extremely well in the last 2 days. So Britannia is the call for the day. That's a buy with the stop at about 3285 for targets around 3360.
Okay, so Britannia is a call from Mitesh, and Deepak Nitrite was the other stock that Mitesh was referring to. For now, the Nifty is up just about 18 points, and the Bank Nifty is up also about 18 points right now. We'll do one thing, we'll take a break. The RBI governor is all set to unveil the Monetary Policy Committee decision. So on the other side of this break, we'll get the special coverage. Of course, Lata will be leading that. Stay tuned for that update.